The biggest fault we have in this country is that we are still educating based on the industrial age. And we have not upgraded our education system. I do not need to know certain things. What I do need to know in this world, and I believe my experience on Chat GPT-3 and Bard, is that I need to know how to ask questions. I need to become an investigator. And schools today do not teach you how to formulate questions that build upon eventual solutions. And I think the education system in this country is one of the largest drawbacks to us becoming a deglobalized, a self-sufficient country. We have the oil, we have the natural resources. We just don't have the brain power.
Hello, everyone. Welcome to the Twin Shores Financial Freedom Podcast. Timothy Nihil here, founder and CEO of Twin Shores Financial, Twin Shores Wealth Management, and Twin Shores Capital. And I'm sure we have a bunch of other divisions we're going to be opening up soon, but we'll talk about those at a later point in time. This recording should be a fun one. This is with a friend of mine, Trent Meyer, another fellow financial advisor who I've known for a long, long time. Watched him and his partner, Valerie Leonard, build Meyer and Leonard from the ground up a long time ago. But Trent is off on his own after retiring as a financial advisor. I always thought and think that he has some really, really insightful viewpoints. This is going to be basically two advisors going back and forth on, I would say, a whole world of different topics. Enjoy the ride. This one's a little bit long, as we can be long-winded when we're put in the same room together. But I just think some of the things he talks about is fascinating, especially the why he retired and got out of the financial advisor business, and some of the realizations he had is specifically around the way the planning has been done and advice has been sold, and the fact that when people get to retirement, there's a whole world of stuff that's never taken into account. And that's why we're always talking with people about 401ks, retirement plans, financial planning is just insufficient to meet future needs for everybody. We're using this as a little bit of a game changer. Hopefully we'll get some people thinking about their finance, and more importantly, just a bunch of advisors getting together and talking about the reality of our world and how we see the future of finance. So enjoy. And as always, like, subscribe, share, comment, engage. We appreciate any feedback and every piece of feedback you give us. So thank you much and enjoy the ride.
I'm Trent Meyer. I was a financial advisor up until April of 21, where I sold my business to my business partner after 22 years in the business, and started out with, if anybody remembers, American Express Financial Advisors, and got in the business over a phone call and the promise of making lots of money. Little did I know that it would be a interesting path I would take, but got licensed, became a financial advisor. That American Express Financial Advisors became Ameriprise, and in 2005, actually 2007, my business partner at the time, Valerie Leonard, who now is full owner of EverThrive Financial out of Birmingham, Alabama. She and I split off from my cousin and my sister, who we were partners with, and we took our third and went independent and left the Ameriprise world, and we built a business from about 30 million in assets under management to my exit in April of 21, right around just under $500 million. And we built it on service, we built it on truth, and we built it on loving the people we worked with. And it was great up until, for me, 2 years away from, 2020, the whole COVID thing, I started getting beyond what I was knowledgeable of at the time. And I started getting more and more into macroeconomics and money flow and the real way this all is working, unbeknownst to all of us who started out in the business and said, just go out and collect assets and just make them happy and tell them they need to buy a financial plan. I became questionable of all that. And I realized that some of the best advice I've ever gotten was from my dad. And he said, to understand a person's motives, understand how they get paid. And then from that perspective, you can understand every recommendation or suggestion they made. And that alone got me to thinking about the whole industry in general and how does the average financial advisor think, and then how do they do things? And it's very, it's a herd mentality. And so I had a voice in my head at breakfast in December of 2020, 2020, and it just said, it's time to move on. And so I have a rule of 60 days. If I won the lottery, do nothing for 60 days. And then I can make a true, clear decision because it's not emotionally driven. And after that period of time, I was talking to my Valerie, and I said, listen, I think it's time for me to go. Made a deal. We did it in 3 months, and I was out. And ever since, now it's sort of this freedom to be able to think and dig and really get into what is really happening and educating those who are interested. And that's what Best of U.S. Investors is all about. Joined partners with my dad, who started a YouTube channel just before COVID hit.
I love it.
He's unique. He will tell you how it is. And he and I partnered up in June of last year, and I brought a certain element, and he brought a certain element, and he built his business doing a YouTube video every day from, I think, October of 19, and he has made a video every day since. And he's 79 years old. He's a machine. And I'm like, how do you come up with these ideas? And he has a underlying theme, and that is to solve, is to cure cancer. And that comes from the passing of my sister in 2014, who died after 12 years out with sarcoma cancer. And that drive and that, like, this is what I want to achieve, has also opened the door of, well, how is the world changing? So he's very much a believer in don't invest in the present, invest in the future. And so he's into a lot of the AI and biochemistry, all that. Right. Yeah. And so that's his driver. I, on the other hand, I'm more in like world greed and power and geopolitics and money flow and understanding where we're at today and how we got here. More importantly, I believe if you understand, like my dad said, you understand a man's motive, how he gets paid, you'll understand his motives. And that is my biggest driver. And that's where we create that yin and yang approach. So
what's the YouTube channel called?
Best of U.S. Investors. And it's Kerry Grinkmeyer. Yeah.
That's your dad's one?
Yeah. He grew it from nothing to 177,000 or so subscribers right now.
Yep.
176,000.
Wow.
Always on there trying to help out, hit like, subscribe, give it a
Well, we appreciate that.
Subscribe right now.
Nice.
And I will be watching it for you guys.
Yeah. He's very, but anyways, go ahead.
Yeah, no, Trent, I think it's very interesting. One of the things that you just said, like follow the money. I tell everyone, follow the money, right?
Yeah.
And I said that for a long time. And like even in my own family, I think I'm finally getting to the point where like, oh crap, he's actually onto something here. So I had some pretty eye-opening experiences during my time, but once I got inside the four walls of BlackRock, I went, oh, son of a gun. Like, when you really see how it works, it is so eye-opening. And then all of a sudden, it seems like it's almost like you have a crystal ball.
you've had a deeper dive into that world, and I am jealous. But I'm very much a seeker of a questioner. I follow the theory of the 10 men rule or 10-man rule. If you've ever seen the movie World War Z with Brad Pitt, and he's in Israel and he's talking to some leader of one of the 10 decision makers of Israel, and he says, how did you make the decision to wall off your country in a matter of a month when you've been doing this for thousands of years? And he said, it's the 10-man rule. And the 10-man rule is, if you have 10 people on the board and 9 of them all agree, the 10th man is to take the opposite, side and prove why the other 9 are wrong. And I apply that to my life and to what is happening today. And it has been a incredible way to approach how these markets are working and how things are working. And I always just, I rarely watch CNBC, but every once in a while I catch it, and I'm just like, every headline changes every hour. You really, and it's a sucker game. It's just, I don't know.
A few words here or there to change to fit the narrative. I know exactly what you're talking about.
Yeah. So
I actually, one time I saw, what was it, Squawk Box?
Mm-hmm.
When they were filming it in Fenway Park. This was like 08, 09. And I got to go see behind the scenes and how it was all put together.
Oh, wow.
And it was another one of those things where it was like, there was always something off with the financial feeds, right?
Mm-hmm.
And it was always one of those things where you're like, huh. And then obviously you have Jim Cramer's on there and the Inverse Kramer and all that other fun stuff. But
what's interesting, and I don't know if you guys look at it from this point of view, but the last 3 years has really, in a way, begin to flip the script in a sense of who truly is in power when it comes to what's going on with the whole Reddit crew, with GameStop and AMC, and all of a sudden those guys jacking with these market makers and these guys. It's like that never happened, and all of a sudden it happened, and then it went away to an extent.
Well, do you think it's because of COVID and everyone was at home? So a lot more people had time to sit and do research beyond the platforms, Reddit or whatever, to coordinate and chat and figure it out, whereas now they're back to work and they can't do that as much.
I think it's even bigger than that. And I think it didn't happen in the previous, say, 37 years, because those people who made that big move on Reddit didn't have the money to make that move. And when COVID hit, what was the one thing that happened for all of us?
We got a check.
Everybody got a mailbox check, right? Helicopter money, right? Well, all of a sudden, you're stuck at home. You get a mailbox check, and all you're doing is watching TV. And so you wake up early one morning, you catch, Squawk Box, and you're going, oh, is this what they're talking about? Let me go dig into it because I have nothing else to do and I don't have to go to work. And all of a sudden, you start to see the wealth shift happen. And that was a sign of that is the whole Reddit thing, and I think it has created what it has done is all of a sudden you have this move from enormous amount of money for 40 years, lowering interest rates, available money coming into the system, and we all believe that money just got cheaper and cheaper, and it flowed into the system, but it only went to a very small group of people. Of 1%, BlackRock being one of them. They took that money.
Let's throw out the other names too.
Fidelity, BlackRock, Vanguard.
Vanguard. Yeah. Everyone that blindlessly gives money to Fidelity and Vanguard.
Rich people became richer because they knew what to do with it. They got the money. They could they could take out a loan and finance it at just dirt cheap rates, and then invest that money and create more money. And so that they, if this is the poor guy and this is the rich guy, they just kept on going like this over 37 years. And what COVID did was it said, oh, we have a massive global crisis, one that, how many movies have you seen over your lifetime that's predicted something of, not zombies, but, well, I don't know. I've met people I would call zombies, but all of a sudden, the average Joe, the poor guy, the middle class guy, all of a sudden got an opportunity to put money to work and understand how, when you get money, instead of spending it like we have done for years as consumers, invest it. And and bingo, all of a sudden, everybody became an investor, and everybody became a YouTuber, and everybody was stock picker and the whole bit. And all of a sudden, that wealth gap started to decline. And because all of a sudden the poor people got money, the middle class got money, not just the top 1%. Right. And I think that, to me, is the turn, the start of the turn. And they talk, Ray Dalio talks about it as the mega macro cycle. And that is fueled by three things: the expansion of credit, war, and social unrest. We've gotten to this point in the world, in my opinion, with the Ukraine-Russia war and then the potential and most likely conflict or war we'll have with China in some way or another. We're now at a stage where war is a big part of, and we've been at war for 20 some years now, as in the United States.
I'm sorry, I was born in 1977. I don't remember not being in war.
Yeah, I was born in.
Give me a time period where this country has not been in war.
It's a business. Bingo. And once you understand, it's a very lucrative business.
Oh, I got a good one for you. So I was down in Tampa last week, right?
Mm-hmm.
And my wife and I go to get a cocktail, and after we had a bunch of business meetings and dinners, and it was kind of like her and our time to kind of chill out and just recap on everything. And we just happened to be sitting next to a group of individuals who happen to be in the military complex. And when I learned what is actually and what is happening with these drones, like, it's straight out of the Matrix. Like those things that fly around, and I don't know what they call them, with the electro pulse and stuff. And then the different sizes to get in different areas. And it doesn't matter, man. These things are being used on innocent people across the world, and they don't care. The guy's like, oh, you know what? They called me. They're paying me $2 million a year for 2 years. It's a business.
Oh, yeah. I mean, you think about what Lockheed Martin, these businesses, they're only making money when they're selling planes, warheads, all that, right? And it's a big business, and we're one of the leaders in it. And so, well, now I understand the motive. Why would we not be at war? It's a good business for the U.S. And part of my sort of stoic, view on a lot of things, I'll say that up front. But now that I understand that that's what the business we're in. And I look at the Ukraine or Russia-Ukraine war, and it's horrible. Yet the way, my theory behind it is the way we're supporting it in sort of keeping it going is by providing the weapons and all that to Ukraine, just to keep Russia occupied so that we can, in a way, deal with China. Because if we had to deal with both of them, that'd be a major strain. But it's also good business, from a profitability standpoint with, I hate to say that, that's horrible, but it is a lucrative business. And to me, we will continue to see war be a big factor. At some point, though, it changes. Some point we pivot. And I think we're in the midst of that pivot.
I think on top of that, I think the vaccinations exposed this. I don't call it healthcare in the United States because it's not, but it exposed what a business health is.
Mm-hmm.
I mean, if you pay attention to what the insiders were doing at Moderna and at Pfizer, you know, you could see exactly. I mean, it's unbelievable when they were buying and selling their shares.
Yeah. I mean, you think about it, what's the difference between that and 2008 or 2009 and money being quantitative easing and money being pushed out to the big banks and big brokerage houses, and all of a sudden, 2010, these guys are getting $50 million bonuses. The C-level execs are making money off the money that was pumped out, and it didn't get out to the regular people. And once again, it's a business. It's how do I influence you getting reelected? And I think it's, COVID was a similar thing. You look at the big drug manufacturers, they print money,
So when did you have, Trey, go back to when you had your eye opener, when you went, like, what changed for you 3 years ago? What was the biggest part of it?
So I've always questioned how things work, how money is managed. I was very into technical analysis, and being stuck at home as of March 13th, I think it was. I had more time to sit on the internet. I mean, for a month, we didn't really do much when it came to business. We just sort of trying to figure out where we were going. Yeah. And I started just digging into stuff. And I think it was probably a Ray Dalio macro conversation he had, and talking about China and all this stuff, and mentioning macro. And all of a sudden, I just got on the Google and started Googling macro. And nobody really gives you here's the process. Start with this, start with that leads to this. Instead, it's sort of this grandiose big picture of macro. It's, this, that, and the other. And most people are just like, okay, well, I don't get that, so I'll go back to what I was doing. And I found a research company out of Connecticut that I could subscribe to their service, and it was affordable, which blew me away. And all of a sudden, I learned more about macroeconomics, the money flow system, and then a process. And more importantly, the foundation of my sort of investment view is my basement. And all of a sudden it became more clear. And the company, to this day, I subscribe to, 3 elements of what they provide. It's not hard, it's not insane, but more importantly, it taught me that there's more than just Tesla in the world. If you want to know where Tesla's going as a stock, dig deep into it, but also understand what fuels Tesla is X, and what fuels X is Y. And once you start to dig back and you start to see the world as it is, all of a sudden it just opened the door for me. And all of a sudden I started to look at, well, where's all the money come from? Well, the money comes from central banks. Okay, I knew that, but I didn't know that. Well, how does it work? And I started digging more and more and more. And to this day, I'm digging into like the whole, 40-year cycle we're in with money credit expansion, and now the retraction of it. And really the true driver of those things, not just the surface of, the Fed lowered interest rates and money became cheap and it went out to the world. Instead of that, money became cheap and it only went out to one group of people. And the repercussions are now this difference in what the world, the United States can afford when it comes to the wealth gap. And now, flash forward to where we're at today, the raising of interest rates 10 times, the sort of the quantitative tightening, which isn't really happening, ball game that's being played. And all of a sudden, the cost of money, all of a sudden went up, not for the average guy, because they couldn't afford anything in the first place. It's for the corporations. I mean, what was it, 48 hours ago or 72 hours ago, you had 7 companies file bankruptcy because the cost of to service their debt. And when a company, borrows money, they typically, if they borrow, like if they issue a bond, they rarely pay the principal, payment against that. They just pay the interest payment, and then they roll that debt to a new set of debt and refinance it. Well, what's happened with interest rates, or like the treasury bond, 10-year treasury bonds for 10 years or 30 years, it's just declined. And so we got into this period after 2000, where money got cheap and corporations just borrowed and borrowed and borrowed, and then they just rolled that debt as it matured. Well, all of a sudden, they're rolling into a whole different ball game, and all of a sudden, you're starting to see these cracks in the system, and you see bank failures. I mean, the whole you have to have so much in U.S. Treasuries mortgage-backed securities on your books as a bank is killing them. And I have a sort of a conspiracy theorist about all that. But
can you go on it? I love conspiracy theories.
Yeah.
So I catch every once in a while, I catch on your Instagram page this talk about I don't know the name. You'll tell me what the name is, but the Federal Reserve's currency that's supposed to roll out, I think in July, is it
FedNow?
What is it?
The FedNow payment system, or the CBDC?
Yeah, it's basically it's going to replace physical and dollars. It's all going to be basically it's crypto, whatever, and some pretty else. Basically, it's all digital currency, right? And I got to thinking about this the other day because I caught something that you guys posted on Instagram, and I was like, they're talking about this all the time, and I haven't really dug into it. But I'm like, okay, so if I'm wanting to take control and wanting to equalize this discrepancy between the haves and have-nots, how would I do it? Well, we have over 4,600 banks in the United States, and you have 12 big prime dealers. Big guys, they get the money from the Fed, then they redistribute that money out to, and so on and so forth.
And those same 12 dealers have been beta testing the digital U.S. dollar since November of last year.
There you go. So you can't manage 4,600 banks. How do you narrow this down to 12? Let's just say 12. Well, the way you do it is you go through a financial crisis, and you blame it on, you create a financial crisis. This is really easy. And you you say, oh, you banks, you guys caused this. You guys, your lending guidelines went down, and you really, this is your fault. So now you're going to have to meet these guidelines as banks. And part of that is you're going to have to hold treasuries, mortgage-backed securities, and these are the only, you have to, these hold to maturity assets. And so over time, we get further and further down the road. We have this one-off event, COVID, the pandemic, and 10-year treasury, I think, is at 55 basis points at one point. I mean, it was nothing, right? Yeah. And so if you're a bank, you're buying that bond, right? And it's real cheap. Flash forward to 13 months ago, and all of a sudden the Fed decides we're going to start raising interest rates because of inflation. Okay, where's inflation? Whatever, that's a side conversation, whatever. So all of a sudden they start raising rates, and they start raising them aggressively. And in 12 months, they raise them 9 times / 10 times. The last time that happened was in 1928, because the Fed wanted to basically squash speculative trading. What happened in 1929? 18 months later, holy crap, you had a reorganization of the world, a Great Depression, or the stock market crash would then lead into the Great Depression. So my theory, conspiracy theory or outrageous theory, is that to normalize the system or reset the system, you have to eliminate a lot of banks. And so by putting restrictions on them and requirements when it comes to the assets they hold, in an environment where yields were very, very low, and then you get to a point where you raise interest rates rapidly, and all of a sudden you start killing off the weak, and you start to kill off the small banks, and all of a sudden, credit card delinquencies start to go up, and the banks start tightening their lending guidelines. Well, they make money in three ways: the assets, the deposits, the lending, and the assets they're holding, the hold to maturity assets, the assets they're trading. Well, all of a sudden, Fed raises their rates so fast, it's more lucrative for me to hold my money in a money market account paying 4% versus leaving it in my savings account paying me, what, a half, a percent?
Right.
Yeah. All of a sudden, and then take into account this thing that Steve Jobs created, all of a sudden I can move money so fast. And all of a sudden, you got a situation in the last 6 months, 12 months, where smart money started moving their money to money market accounts where they get more money or more yield versus their checking accounts. And all of a sudden, you start in the March of this past year, you see three major bank failures: Signatures, Silvergate, and Silicon Valley Bank. And then come in another month, and you got First Republic Bank. And now PacWest and Western Alliance are all on the ropes right now.
Yeah, I'm like, soon.
I hear Schwab's going soon. And I just saw this morning, like Goldman, Kraft, they all sold their Schwab stock.
So
the other thing too is Jamie Dimon came out today on Bloomberg and said they don't foresee themselves picking up and scooping up any more banks.
I saw that. And you think about that, all of a sudden in a matter of a 24-month period of time of the start of raising rates, Fed funds rates, all of a sudden I got these assets that are completely underwater, and all of a sudden everybody catches the wind that I can move my savings account that's paying nothing to a money market account that's paying a whole lot with no restrictions, no timetable, full liquidity. All of a sudden you have this mass rush, and team that up with the cost of refinancing your debt as a corporation, and all of a sudden you create yourself a good old-fashioned recession, if not deep, on the edge of a depression. You filter out the bank system, you push it all to 12 banks, and all of a sudden now, one day on the 6 o'clock news, you can say, as of next week, your anything lower than $100 bill is no longer legitimate. It doesn't work.
Yep.
Trade all your cash in. I forget the year that India did this.
Was it 2012, I think?
Where they, on the nightly news, they said anything less than $50, and I think it was gold as well. I'm not totally sure about that. I need to double check that, but
I don't remember gold, but they had certain denominations of their currency that they were pulling in because they were using it as an attempt to basically shut down terrorism.
Well, it was the black market because because I think at the time, 10%, 15% of the Indian population actually paid taxes because it was all done under the table. And so they did that, and you had a rush on their banks and all that stuff. But I guess my whole, I hate to say conspiracy theory, but I'm the sort of belief that everybody we're humans, we're not perfect, and we do bad things.
I don't like using the term conspiracy theory. I like to say critical thinker, because
there you go.
That's what you're doing. You take everything like a grain of salt that they give you, do your own research, and try to figure it out. Don't listen to mainstream media that just blast you with the same reiteration over and over and over again.
I think a lot of it comes down to, it's a fundamental thing, right? Is when you do your homework and you really start to see what's going on, then you kind of get it's an eye opener into really how it works. And I think one of the biggest things that we've talked with people, Trent, is we're watching people that are retiring now. And I mean, a lot of them are burned out. They're getting crushed by inflation, I guess, if you want to call it, but it's basically just prices going up. And then another thing that I hear from a lot of people is it's kind of twofold. Is one, when I was 20, 30 years old compared to when I'm 70, 80, never imagined the world would look this way. Right. And then part two, it's like, hey, I was kind of sold a bag of goods along the way, and this retirement thing's kind of a load of crap.
Yeah. Yeah. Well, retirement is an invention by money managers to collect assets and charge fees. There you go. If you look at the human condition, how I am structured as a human being, physically and mentally. Physically, I'm meant to be moving at all times. I am supposed to be stressing my body in a positive way physically every day. And mentally, my brain is designed to solve problems. It solves problems within my body, but more importantly, it's used to solve problems outside of my body. And retirement to me is just save for 30 years, go sit on your butt, watch CNN or Fox News, and become a pessimist and get ill because mentally your brain will get negative, and go to the doctor that first month and have your annual checkup. And by 12 months later, and I saw this after 22 years in the business, by the end of the year, those who didn't get it were going to the doctor at least twice a month, if not every week. And the prescriptions fed the pharmaceutical companies. It's just, I honestly, I got to a point at the end of my time as an advisor when people would come in and say, I'm going to retire. And I'm like, why? Well, because I'm tired of doing that. Okay, well, fine. Just change careers. Do something different. You got money, but go back, go work 25 to 30 hours a week. Do something. Yeah. Oh, no, I'm not doing that. I'm like, I'm telling you, if you don't do it, you're going to lose, like, your brain. You're going to lose physically. I'm telling you, start doing it. 70% of them, within a year, they had health issues. Unfortunately, a smaller percentage all of a sudden started developing dementia because they just quit working. And your body and mind is supposed to do that. And it doesn't mean you retire and like, oh, I'm going to go get another job. It's intense. Go do something you enjoy and you got passion for, So, yeah, I mean, I sold my business because of many reasons, but immediately realized after about 3 months, I like the game. I like this stuff. And I'm like, oh, now there's no restrictions. And I can say just about anything. And I became this investigator. I'm driven by it. I'm like, I was talking to a buddy on Sunday. I met up with him while I was here. And he's like, yeah, but you're retired. I'm like, I'm not retired. I work 7 days a week and I love it. I love it. Yeah. So anyhow, I don't know how we got off from that.
No, that's all right. We're pretty similar in that fashion. So, so let's chat a little bit about that. So now and you could see it's follow the money, right?
Mm-hmm.
It's very interesting to see what's happening today. Like, what are your major concerns that you have with what you're seeing, and what do you think people should be aware of that they might not be aware of or even thinking about?
If my concern is the younger generation, the millennial, Gen Z, or whatever, and they've all bought into this indexing approach. And they, ETFs came out, or indexes came out, and ETFs came out, And the younger generation has grabbed onto this. All you have to do is buy the S&P 500 and hold it forever.
Right. And that's a lot of it's being pushed. Oh, Warren Buffett said, and lots of people, Warren Buffett's not that bright.
Warren Buffett, Warren Buffett's a smart guy, but he has a time frame of 100 years.
Right.
Every day. So every day, it's a new 100 years. He invests totally different. But for the average investor, they buy that headline. All you have to do is buy, over the last 100 years, the S&P's average, 12%. Well, I'm sorry. 100 years ago, we didn't have the internet. 100 years ago, we didn't have massive leverage. Well, 100 years ago, you didn't have quantitative hedge funds driving algorithms and manipulating markets. I mean, 100 years ago, you didn't have any of it. And today, we have, I heard this guy say something. He's like, they're all getting all hyped up on AI. He goes, we've been, I was using that at Lehman. We were running money on him at Lehman.
We've been using AI for a long time.
Right.
It's just coming out to the public market now.
Exactly. And I think that the fear I have is that the belief that things will just stay the same. And when you look at, what is it, the NASDAQ 100, triple Qs, 50% of that market or of the assets in that are between two companies? Apple and Microsoft? Yeah. Some level of that. If it's not 50, it's out, 25. It's ridiculous. And then you look at like the S&P 500. It's market weighted. Well, Apple's one of the biggest companies out there, so it's the biggest holding. So whatever Apple does affects the S&P. And I think that's where the misunderstanding of ETFs and this generation who have just said, all I have to do is this. To me, that's when the crap hits the fan, and it'll go slowly and then all of a sudden fall off a cliff like we saw during the financial crisis. Those guys are going to get hosed. And the sad part about it is it's going to be discouraging because they'll go from, I've saved up, over 10 years. I have an account worth, $500,000, and all of a sudden it's worth 50. And that's going to just change the attitude of that generation. They're going, this is a rigged game. And they're not going to invest in the market.
When you buy an ETF, you're not buying shares of the company.
Right.
You're buying a unit on a computer. Right? Those are pure play ETFs are units on a computer, and you're transacting with the dealer that's selling it to you, whether it's like an iShares, which is BlackRock, State Street. Vanguard's a little different because they had to build theirs as extensions off their index funds.
Mm-hmm.
Their index funds got too big. But I don't think that people understand there's no one watching over your money when you buy an index.
No. And the attitude that it will be the same, to me, is the real knife in the heart. Because my world in 20 years, my world in 3 years, my world in 6 years has drastically changed. How do I graduated high school. If it weren't for art classes, I would have graduated with a 1.8 GPA. I was just not good. And the reason is because I have ADHD. It's a legitimate thing. I had it as a kid, but nobody knew it was. My parents were all on it, and science was not there. But I look at what I'm learning today in the things that I'm working on this first exponential calculus formula that without technology, I would have struggled going through a book. I learn more today, and I would consume more knowledge today than I have ever. And to think that our world is going to stay the same investment-wise, you got to be like on smoking crack or something, because and that's the thing I fear is this, and I see it because of the YouTube channel, the Best of U.S. Investors YouTube channel. I see these other people, and I subscribe to the younger generation just to see what they're talking about and money management and all this. And it's this attitude of, oh, you just buy it and hold it forever because it's worked in the past. Well, our world's changed. In 6 months, it's changed. And I guess that's my biggest fear is all of a sudden that crowd is going to just get taken out by the knees and they're just going to walk away and go, I'm not doing it. I'm not doing it. And I believe the stock market, when understood, can be a very powerful wealth creation tool. I believe you should look at all types of investments. Real estate, I think it's great, but it works in cycles. And when you understand the cycle, you can understand how to invest in it. Right. And that's my biggest fear. I think second is how much influence or control government is having, if not government, outside entities. What freaked me out, I saw this Instagram post, this ex-Navy SEAL guy, and he interviews unique people. And one of them was he interviewed this ex-CIA agent. He talked about why the Ukraine war is going on longer, and it made a whole lot of sense to me. But then he had somebody on there, and I saw it the other day, and he's like a computer hacker. This one I saw was about an AI device that he created, that he can walk into a house, a building, a room, and it will crack the firewall on a network. It can then go in and he can penetrate, and he can jump on your computer, he can jump on your phone, he can jump on all this stuff. Two ways I looked at it. One, it freaked me out because I go to coffee shops and I work from coffee shops every once in a while, and I log into their network. I'm like, oh, well, great. They're in my computer now, right? And then second is like the opportunity in it is cybersecurity. It's how we're going to crack this one. Who's going to create, the firewall that can't be cracked by AI, which the way I understand AI, that will never happen. But I guess
is it Andrew Bustamante that you're talking about, the video you're?
It may be. I don't know how I'd go looking again for it, but I think that that is one of the concerns I have is that is the vulnerability we have and the naivety of people, and they're just trying to survive. And unfortunately, like the financial crisis, it just happened all of a sudden. Like nobody realized Bear Stearns failed. Nobody realized that the dollar, money market accounts got, depegged from the dollar. I had a friend of mine who had sold his business a couple months earlier, and he had his money in TD Ameritrade, and gets this email saying, you're not allowed to move your money because it's no longer worth $1 for $1. Right. Those things to me are like, that happened all of a sudden.
So that's the concern with this Fed now switch over.
Correct.
Too.
Exactly.
If they go digital, like when a few years ago, when in Italy they said, hey, we're going to exchange your lira for the
euro.
The euro, right? And then all of a sudden, oh yeah, by the way, you're getting 50% less of what you had.
Right. And here's the thing that I don't like about it, because I've become sort of this control freak in a way of my environment.
Yeah.
How do I play that? How do I protect myself?
Hard physical assets, crypto, gold, silver, anyone that, what I'm curious is institutions or other mom and pop shops or wherever your grocery store, are they going to accept hard physical assets if I go and try to buy groceries, or do I have to use the FedNow payment system in order? Maybe they won't accept anything other than the FedNow.
Well, and you think about it, just the mentality of the human race is, I'll get pissed off. Oh, I can't accept dollars or quarters anymore. I have to do everything via card through their system. Well, that really pisses me off. And a week later, like, that's all we accept now. Mm-hmm. That's how we are, a herd mentality in this country, in the world for the most part. And I think, to me, that's where that turn, that mega, macro cycle pivot could really happen in a big way. And that's where I look at something like what we're talking about with the Fed Pay Now system or whatever. All of a sudden you tell me my dollars are not worth anything. There are a lot of people with a lot of money sitting in their mattress. A lot of people who carry a lot of cash. I know guys who have, 100K sitting in a safe. And the reason is because they just believe in paying in cash. Keeps them on a budget. It's how they do it. And now you're going to take that away from them? Well, I live in the South, and the one thing that is very plentiful in the South is beer and guns. and that's where I go, yeah.
That's who you really have to be concerned with, because and I don't even see this as necessarily a United States thing, but I see this as more globally.
Mm-hmm.
There are a lot of people outside of this country that are pretty awake to what the American system has brought them, and they're pretty sick of it.
Yeah.
That includes the Europeans too, because everyone's kind of done with this IMF thing. So it'll be interesting. And you could tell, you talked about the dynamics for war. You can already see these governments and central banks try to crack down on people. And you're already starting to see the other side stand up and say, hey, we're not cool with this anymore.
Yeah. Do you see like a deglobalization starting to happen?
I see parallel economies in a sense, right? So you'll have the BRICS nations come in and they'll do their own thing. And I see them, China, everyone who else is using our treasuries will dump it once the dollar, right? Send it back, create their own gold digital currency even, or that you already see it happening. I know Texas is trying to do something like that. I know, who was the other one? I was reading an article, I forget. But I do see it. I see a more of a parallel economy where both ways are, you know what I mean? You could go both routes if you want.
Yeah. I look at it, was it 2004 maybe, when Berkshire Hathaway bought Burlington Northern Railroad? And I heard it, I was in the car and I heard it on CNBC and I was like, why would he buy a railroad? And I look at it now today and I go, well, because AI or robotics creates a way to manufacture in this country without the cost of an employee. Yep. And you got to move that stuff around. So the rail system is a fairly reasonable way to do it. And I start to wonder more and more if over the next 5 to 10 years, if we'll, instead of this shirt being made in Indonesia, it'll say made in Tennessee.
Made in America.
Yeah. And I wonder
remember all the kitchen stuff we used to have made in America was fantastic.
Oh, yeah. Everything was made in America in the 70s. I mean, holy cow. Yeah, it did.
But do you think we have the workforce to do that? Like, do you think...
The biggest fault we have in this country is that we are still educating based on the industrial age. And we have not upgraded our education system. I do not need to know certain things. What I do need to know in this world, and I believe my experience on Chat GPT-3 and Bard, is that I need to know how to ask questions. I need to become an investigator. And schools today do not teach you how to formulate questions that build upon questions that build upon eventual solutions. And I think the education system in this country is one of the largest drawbacks to us becoming a deglobalized, a self-sufficient country. We have the oil, we have the natural resources. We just don't have the brain power. And we don't have the system to say, hey, those guys in China, they're educating based on these certain things. Kids coming out of there learning crazy math and whatever. And
they're doing calculus by the time they're 10.
Yeah. Yeah. But we're not doing that.
Yeah, they're doing STEM. They know how to build computers and do all. Yeah.
Yeah.
I agree.
If we switch that, if we could get the minds in Washington to go, wait a second, we're going to get left behind here real quick. We are left behind real quick. We need to start with education. We need to start with getting up to speed. I mean, I read Meta is paying AI programmers $600 to $1 million a year to come work for Meta. If you understand AI and how to program. Holy cow. How many people do you know in your lifetime that understand computer code in AI, for AI? Like
one, maybe one.
Right. Could you imagine if that increased
tech? I'm a little.
Well, yeah. Yeah. I lived in Alabama way too long, so I don't know anybody. So anyways, you think about it, we could switch that in the education system over the next 5 to 10 years. Where would that take the United States? How more powerful could it become?
It would fix the number one problem we have. And my feeling towards it a lot of the time is we just have a lot of adults that live under this delusion that what's good enough for them is good enough for their children.
Yeah.
And I think that's been a generational thing for a long, long time. And that's the problem.
Yeah.
That's it. That's the So my story with education was I was pulled out of the public schools because I could do mathematics better than teachers.
Wow.
So my parents pulled me out. I went to a private high school. I walked in, and the first thing they said is, we want you to question everything. And from that day on, Trent, my mind was blown.
Yeah.
Because it just launched me into this whole new world of, I don't have to listen to anybody else. I want to hear them. I want to learn, but I get to process the information. Right?
Right.
And then, like you said, when you can really start to investigate things, I mean, man, there's just, it's incredible.
It is.
But
And
our kids are not being taught to learn.
No, and they're not being taught discipline. I caught some video on YouTube with Nick Saban. He's the coach of Alabama. He is the highest paid federal employee in the country, if you didn't know that.
I did not know that.
Yeah.
I don't know what Tommy Tuberville.
I think it's Nick Saban. And then who was it? Brian Kelly from LSU. I think he's one of those guys. But anyways, that aside, he made the comment. He said, discipline is the first question. Discipline is doing the things you don't want to do. And in the education system, from what I see, we've become very soft on that. No, I did not want to learn math. And yet I was told, if you don't learn math, you're not graduating from high school, which means you're working at McDonald's. And I don't want to work at McDonald's. And so I struggled, and my parents pushed me and like ripped into me. You're not going to get out. And I was forced to do it. Today, you got the parents showing up at the classroom going, I can't believe you give my son an F. He's not an F. Give him an A. And I've seen that on the private school side of things because I had 2 kids. And because these people were paying money for their kids to go to school, the parents would walk in and like, no, he's an A student. I know he's flunking everything because he has no discipline. And we're not supporting him and not pushing him. And I think that is partial. And then the whole No Child Left Behind program that's been going on for years. People need to be pushed out of their comfort zone. People need to get uncomfortable, and they need to get comfortable with being uncomfortable. And I believe that mentality has left this younger generation of people who have had kids recently. They don't want to see the kids suffer. I have a situation going on with one of my kids, and they're bummed. They're bummed about a situation. And my mentality is, I'm sorry you're bummed, but I'm glad you are. Because if you get bummed enough, you're going to find a solution, and you're going to be able to pull yourself out of this by yourself. We're not teaching that. And it's okay to suffer. It's okay to be bored. I made a comment to my nephew. He pulled out his phone. We were at dinner a couple weeks ago. And I said, why do you hate me so much? And he looked at me and goes, I don't hate you. I go, no, but you do. You really think I'm a piece of crap, don't you? And he goes, like his eyes were like, no, what makes you think that? And I said, because instead of sitting here with me, you decided whatever was more important on this was more important than me. And what I interpret that is that I'm a piece of crap in your eyes. I'm not worth your time. And I think we have a world, and
you weren't very indirect on that one, were you?
No, and he looked at me and he goes, he looked at me and he's a smart kid and I love him to death. And he says, I get it. I was like, cool. Then you do love me? He goes, well, yeah, sort of. He was kidding around. But the point is we shouldn't be that way. And I'm sorry, this sounds like we're getting off the track a bit, but I think it's the mentality that is sort of spreading in our country. And I'm more focused on our country than the rest of the world because this is where I live. And I think this is a great opportunity here, but we've gotten soft. And I think, unfortunately, you guys work with Depression era baby, investors, right? And they're conservative, they're polite, kind, and they bust their butts, right? And unfortunately, the way they became that was through the Great Depression. And prior to that, they were going through a period like we have now, where it's just everybody gets everything and it's A-okay.
It was free money.
And I think we're in a stage, and I hope not, but I hope we could learn lessons that a really hard recession could teach us, and I wish we'd just all wake up one morning and go, you know what? There's a lot of things I'm doing wrong here. I'm not working hard. I'm not fighting through pain, hard times. I need to be more attentive to the people around me. I need to slow down, be patient. And I need to educate. I need to learn every day. I wish that would happen overnight, but it doesn't. So, yeah, that's my great.
Right, it's almost like the proverbial wake-up call.
Yeah. I think we're there. I think we're getting there. And I hope I can position my family well enough, and most importantly, educate those around me to say, just stop and look at what's happening. Question it.
I think that's the thing, right? Like when you stop to look at what is happening and how things are aligning, I tell people, like, listen, we're going to grind a little bit for a couple years, but this is going to be one of the greatest opportunities to accumulate wealth you will ever see.
Yeah.
If you play it right, outside of buying like Pepe meme coins,
man, that would have made millions.
Would have.
Too. Yeah.
My favorite one is hope is not a tactic.
Right. Well, and then what we learned, it's like they already predetermine who gets the initial coins for the run. You can't just go out and buy it. And then once that major run out happens, then they open it up to the rest of the money. And then the initial people cash it out and everyone gets it. It's no different than the IPO markets, right? At least it's not a lot different.
Do you all, I know you guys you manage a crypto fund, this, that, and the other. Do you look at what's happening in crypto as similar to, say, the .com boom, where everybody and their brother had a .com company, and then all of a sudden you had a major shakeout, and now you have the people we have? And if so, who's the top 5 that survived?
Well, I would agree. Yes, it is the .com boom. It's a weed out system. I think, hold on, I'll tell you how we have, I think a total market has almost 10,000, almost 11,000 coins in total. So I would probably say the top 5 would be ETH, BTC, BNB, and you could go with Cardano. I would say, like, you're getting to a point where after the top 2, in my opinion, ETH and BTC, it's going to be a scramble, right?
Is it?
You could, yes, I could see that. You don't know what's, like, BNB, the Binance coin's only big because Binance is the number 1 exchange, right?
Right.
And I think that's how they move money around and are able to do stuff without a lot of people noticing, right?
Yeah. Well, so when looking at these, are you looking for like the problem they're solving?
Well, yeah, think of, how do I say this? BTC would be more of your digital gold, and I know if people don't like to hear it like that, but right, there's the finite amount. There's only 21 million, and everything is on the recorded ledger. So anytime someone moves a Bitcoin, you can see what address moved it. And then Ethereum, I think, is like the internet in a sense, right? It's a Web 3.0 for institutions and anyone that wants to create something, their own app, and get paid. You can pay people. You could do, I think games will be on there eventually, right? Web 3.0 and so forth.
Okay.
Now, the other ones are trying to be like Ethereum, right? These other blockchains, ADA, BNB, Polygon, they're more layer 2s, right? They're going to help
I think Polygon is here to stay.
yeah.
If you look at Amazon, launched some web services and things on Polygon's network. Last week, 2 weeks ago, Franklin Templeton put their U.S. government bond fund on the Matic platform.
Wow.
Well, that is Ethereum in a sense. It's just a layer 2 or it's just to make transactions because gas fees get too high on the Ethereum network. The L2 is helping mitigate those transactions using it, and it's way cheaper than Ethereum on the Ethereum to do those transactions.
Right.
I mean, we can't get it here, but I think XRP.
Oh, was that Ripple?
Yeah, Ripple.
Yeah.
And then I think there's going to be one that comes out of the woodwork that no one's expecting. It's not here yet.
Correct. I would agree. There's going to be some new chain or something new that people make that comes out.
How do you? So, I would say that our audience, that at Best of U.S. Investors, we do a Friday call with members who are part of a certain membership level. And when you talk about crypto, I would say the average age is probably 56, 57 years old.
Really?
Yeah. I think we have an older audience because of the attraction of my father, Kerry. And being 79 years old, a lot of older people relate to him, but we also have a younger generation. We're starting to build that more and more. But a lot of those guys are like, I just don't see where this all, crypto thing fits in. Yeah. When in the future, and I believe that just the efficiencies in blockchain technology and the solutions it can create are incredible. And full disclosure, I do mine Bitcoin. I've got 6 miners, and with miners going down in price recently.
Well, that's where all my electricity is going to.
Right.
Have you ever hit? Out of curiosity, have you ever hit the transaction off your 6?
So I have a family member who has a full-on. He houses everything for me, along with like 6, 7 other guys, and I'm sort of hands off. I had the money and I went and bought them, and I was like, the technology and all this, and so I'm pretty naive, but I also I look at it as I'm a believer in multiple income sources. I followed sort of the Tim Ferriss approach to money, and so it's an income source. And so, but I
got an idea.
So explain that to me if you got a second.
What do you want me to explain? I'm sorry.
The coming off the 6 or something like that.
What was? I'm sorry.
You asked me a question. Have you seen it?
Oh, have your machines ever process the transaction so you guys receive the Bitcoin? Does that make sense? So if you crack the code on your machines, I don't know how many you have, you guys for every transaction that happens in the 10-minute time, you get Bitcoin. They pay you 6.25 Bitcoin for validating the transaction. Have you guys ever hit?
I honestly, I don't know.
Oh, okay.
So I get paid every hour.
But Trent's gonna go back and make sure that they hit one.
Yeah, right. Right. Yeah. I mean, I check it every morning and I'm like, oh, wow, I'm making this kind of money every month, every day kind of thing. So I'll definitely I'm very, I know where my limit is. Let's put it that way.
Yeah, I like the cash flow type aspects. One of my favorite coins is Curve. You can stake it for 4 years, and they pretty much pay you out like weekly, pretty much, or it's not really weekly, but I could cash out today, right?
Right.
At whatever I've earned, and over the downfall, I would say this past year it paid us between $3,000 to $5,000 every month.
Wow.
Now we did have $250,000 of them, but still,
yeah, helps out a lot.
Yeah,
yeah, and I think that's that's part of like investing. I haven't.
That's what investing is.
Yeah, and I think unfortunately, most people are like, oh, I just buy the S&P 500, or I run a 60-40 portfolio. I'm like, well, is part of that 60-40 portfolio have something that maybe not attached to volatile markets?
right.
Or the bond market,
Paying you a dividend or anything?
or do you own a rental home, or do you the wealthiest people I know own real estate. They're all in real estate, multifamily complex.
Yep.
And they're like, they all have the same story. They started the same way.
Right. Wealthy people do not buy S&P 500.
No, and I think that to me is what's encouraging, and from what I see is more younger generation. I have a daughter who's like wants to save up and buy a rental home, a vacation type rental home because of where we live, and that's part of her investment her investment thesis is to do that. She looks at the stock market and goes, I don't get it. And I got the other daughter is like, she's the one with all the cash in her in her underwear drawer, because she thinks the banks are evil and they're all going to take her money from her. So I think there's a happy medium. So anyhow, but yeah, I look at crypto as that whole next layer of technology that's going to create smoother transitions. The fact that I can move money from here to Singapore in a matter of minutes compared to the old system.
And less fees. And like I was reading an article, I think it was yesterday, about how the Bank of England or Germany moved 200,000 tons of gold, and it cost them like $16 billion last year. If they would have did it with Bitcoin, it would take 4 minutes and you'd pay $308 for it.
Yeah. Well, and the thing is, it's like anything when it comes to change. I mean, people hate it. I mean, I remember sitting in a class at the University of South Alabama in it was a macro media director class, similar to what Adobe Premiere Pro would be today. And the teacher was like this computer science guy. And he says, I want you to all come over here and I want you to look at the computer and I want to show you something. This was like 91. Yeah, no, it was not 91. It's probably 89, 90. And he takes a phone, he puts it on a modem. Most people don't know what that is. And all of a sudden it dials up and he goes, and this screen pops up and it's some browser. I don't know what it was. I think it was pre-Netscape world. And what's that?
Like web crawler 2.0.
Yeah. And he goes, this is the future. He goes, if you learn anything while you're here for the last 4 years, focus on this. It's called the World Wide Web. And 90% of the class said, you're out of your mind. I don't get it. And they moved on. And I think that's where we're at today with crypto, with blockchain technology, with AI and all these. And I think longer term, these are the places where you invest. And
I would agree.
But understand the foundation of your house and what it's made up of. And that is the macro cycles and money movement. And you understand, like, if you can build your financial knowledge from the basement to the third floor, the attic, you're going to be a better investor. And if you just take some time to do it. And unfortunately, I would say the majority of financial advisors I know will not take the time to understand it. They're just collecting assets and feeding the same line. It's always gone up. It'll recover.
Yeah,
you know,
stay the course.
Yeah, stay the course.
I did it.
Our computers rebalance back to our 60-40 allocation.
Right.
Love it.
Yeah. Yeah. I write in my newsletter every so often, like, in a year, Forbes will, or Barron's or Forbes or whoever will say that XYZ hedge fund manager made $30-50 billion take-home pay because he bought treasuries at 5%. And everybody rushed into him. He made a ton. And he leveraged up 50-1. And that'll be the story. It won't be because they held Tesla, down to $75. It won't be that. And I think that's, unfortunately, it's just, they're just companies. They're just learn the cycle, learn to invest in them, learn to play the game, learn to reallocate. So anyway,
I think the only one thing I think crypto's downfall will be is how if you mistype in an address and you send it to the wrong address, you lose it. I think that's the biggest thing, where if I call my bank and I have a charge on there, I can call it and get it canceled, where with crypto, you send it to the wrong address, you're SOL.
Well, and you think about, the stories, the guy loses his hard drive and he's been digging through a landfill for 100 years or something. That is the scary part of it. I had a client, he was a young guy, and he told me, he says, yeah, I had a hard drive. I was like, what's that hard drive worth now? And he goes, probably about $500,000. And he's working at a restaurant. He inherited some money. And it was like, he goes, that would have been a life changer. I was like, have you looked everywhere? And he goes, everywhere at least 20 times. Right. And that's a hard part about crypto, is that you lose that address, or you make one, like you said, one keystroke wrong, it's gone. Okay. Yeah. You solve that problem. That becomes interesting.
Well, and it's not 100% ready for the end users yet.
Yeah.
And so I've been, we've been, Alex and I have been going on this crypto thing for since 2018.
Yeah, 2018, 2019.
Yeah. And I put him in front of a buddy who used to run Money for Fidelity, hates crypto, 3.5 hours back and forth watching him play ping pong. And every single time my buddy Chris had something against it, Alex like, nope, but this. And I went, holy shit, there's something here. And then when I saw blockchain and Bitcoin, I went, oh my God. Like, blockchain is going to transform the entire world. Like, to the point you can't believe. You'll walk in the grocery store, it's already happening. I can scan my beef. I know all the way down to that cow, when it was born and what it ate its entire life at the click button.
I'll argue that won't happen, because if you figured out how much what those cows were fed, you wouldn't buy it.
You weren't going to buy it. Well, that's going to clean up a lot of that industry.
Yeah.
Right? Like non-GMO, GMOs, all that jazz. But at some point, it's time for the professionals to take over crypto. Like, we just don't have the people that have the understanding of how to translate it down into all the day-to-day people. And the other part of this, it's too much of this person did this versus this person. It's almost like you have a bunch of arguing teenagers in the room, and it has to get to the point where we have to get it into the people that can take this thing to the next level.
And who are those people? Like, what do they look like?
Not the U.S. government. I'm sorry. Like Gary Gensler can't even tell you what. Like
It's
what?
it's Apple.
Right.
I think it's Apple.
Wow.
I think it's Tim Cook. I think it's Apple. If you get Apple to take and really get their people to run with crypto and even throw in Google, if you get the programmers from Georgia Tech and all these kids that are so into this stuff,
Yeah.
well, give it to them and let them run with it. And I can just see it going to a whole other level.
Okay. All right. So I'm going to sort of go off the deep end on this. Let's say that happens. And just use your imagination where it could take you. Do you eliminate the present financial structure of the world as we know it, with central banks, with U.S. Treasury?
It's completely restructured.
Mm-hmm. Yeah, they merged.
I was having in one of my meetings in Florida last week. I'd never even considered this, right? Like if you look at Bank of New York Mellon and Pershing, they're like on the front lines of this because they're talking about the tokenization of assets, right? So if as an investor now, I have this really, really good Italian shop down the street called Monty's, and their food's incredible, their selection's incredible. So why wouldn't I want to give Monty's money if they pay me some sort of return, right?
Right.
So instead of your money going to some corporation like IBM, who you don't really know what they do anyways, your money now goes to the local restaurant or shop down the street, and then they're paying you a return.
Yeah. I thought about this with years ago. Sorry, when I first got into understanding what Bitcoin was, and I thought, think about the existing IPO world, right? Think about Terry's Plumbing down by me. He needs to raise capital.
Bingo.
He's good at what he does. The bank is going to say no. You're seasonal. No. You're too risky. No. But everybody who's actually called Terry at 3 a.m. and said, hey, my toilet's backing up all over my bathroom. Can you come out? And Terry shows up immediately, solves the problem. He all of a sudden has an advocate. And I get and that person can have the opportunity to buy and own a piece of Terry's business, and he can raise capital and buy more equipment and more people and
more people.
And he avoids the whole banking system and all that. Holy cow.
Right.
Now play devil's advocate there.
Sure.
Do you think that could hurt investors in any way, right? Say, whereas if the bank invests, only the bank takes a fall if Terry's Plumbing goes under, right?
Right.
Whereas if you have a bunch of retail investors or other people come in, repeating customers come in, couldn't they lose their money if Terry's Plumbing goes out of business or doesn't do what he's supposed to?
Yeah. I have shares of Colonial Bank out of Montgomery, Alabama. And I took a chance. I took a risk. Did I bank it? I banked there at one point in time, I believe. It's now worth zero. I think it's the same level of risk, but it's more, I don't know Tim Cook. And I don't know Jamie Dimon. And I don't know Elon Musk. And I have no way to actually sit across from them and know who they are as people. And then they're so big, but I do know Terry's. And I think that's where, there's more pros than cons. Yes, Terry could be like, squander the money, go out and buy a boat in the Caribbean and
sink
and sail away with all your money. Absolutely. That's why it has to be regulation on it.
But that is why you have insurance.
Right.
You, as part of that deal, you buy insurance that should something happen, that your investors are paid out. And I think that's a way you can get around that one a little bit or deal with that one. But yeah, I think there's risk there. And it was kind of like when we were a long time ago, we were playing around, and I was like, what if you created a stock market where you get to invest in people? Right? Like
Oh,
if I had, Alex Kaminer Incorporated stock, and hey, you know what? We're gonna raise $250,000. You're gonna pay us a 3, 4, 5, 6% return over the rest of your life, but this gets you off the ground. Why wouldn't I? Why wouldn't I do that?
isn't that a form of private equity?
It is.
Yeah.
And
You bring it.
And here's why I think the system is gonna fundamentally change. And I think this applies to governments as well, because with the adaptation of technology, governments go away, right? And the reason is we have a system where it's based on tax revenue,
Mhm.
where we all have to pay taxes. Why? Shouldn't our governments be issuing credit to all of its constituents? We should all be given credit so we can go out and invest and grow, shouldn't we? This is
If you had if the majority of the United States, the citizens of the United States, had the mentality of entrepreneurship, if they had the mentality of discipline and hard work, they don't have that right now. They just want a free paycheck. They want helicopter paychecks. I mean, how many people did you run into during that period of time that were like, I'm getting money, and guess what? Check out my new Louis Vuitton. Check out my new car. This is great. Instead of taking the money and saying, hey, I'm going to go and I've got this idea for a company or a service, or I'm going to go out and buy some reoccurring revenue. We don't teach that. That's not, if that was it, if that was how people thought, absolutely. You would generate more money in this country in a heartbeat.
that you could possibly fathom.
But I
But
think
you
that's how we
also-
grew up and we're trained, right? Yeah, and I'm a younger generation, but I was taught you gotta graduate high school, go to college, graduate there, and then you'll get a good job and you'll be fine. You'll be able to buy a home and do all this stuff. And I'm like, Dad, I had to move back in with you during COVID in order to buy my first home, to have like zero bills, no rent, nothing, in order to save up for it. Like, times are different. Like, you can go and teach, like you were saying earlier, you can go and learn off of YouTube, teach yourself. There's plenty of educated people out here that do great content that you can learn from, and you just have to apply what you learn.
Yeah. I mean, I grew up in a household of an entrepreneur. Um, he was a salesman. He started a college newspaper in Minneapolis, Minnesota. He and another guy, and I would say he went and he built that. He went worked for another company. He got fired from that because he was too much of an entrepreneur. He questioned. So I grew up around that. But most people don't grow up around that entrepreneur household, and that,
Rich Dad Poor Dad got started.
yeah. But most people I know just want to get a job after spending 100 and some odd K in college. And that's their first thought is, I'm going to graduate from, FSU and get a job, get a job, and I'm going to go work for somebody. Instead of, I got this education, what could I create? I mean, you're young, you can fall on your face. It's a shorter distance to the ground when you fail at a younger age. But why aren't we, we're in a way pushing that, be an entrepreneur. FSU, Florida State University, has a entrepreneur program. I'm like, what does that entail? Does that entail you trying to figure out how to deal with a disgruntled employee? Or does that entail, well, this is just the book we read and this is the education? I think we taught more of that and we created a system of more individual businesses. Like if I invested in Alex, I could buy into Alex's idea. I think you could, wow, the power of that. But the thing about that is it challenges the people who are in power now. Because now, if I have the upper hand, why do I need Washington? you know?
And where are all these other big institutions going to get workers as you go and start your own thing? No one's going to, these companies won't have anyone to work for them.
Not everyone's an entrepreneur though,
Well,
right?
Not, they won't have the best talent per se, right? The people that can't, the greater talent will probably be like, well, I can do this by myself. Why do I need to go work for Google or whatever? I can start Joe Schmo's tech company, right? And make, data stuff myself.
Yeah. I think they're taking that kind of risk it takes a certain mentality. I have a hard time working for anybody. Because I've done it. I've been on my own company, and I have fallen on my face, and I realize I can still get up. Most people just can't do that. It's the risk. They just want to be able to, go to the ball game on Saturday. Yeah, instead of fretting over how am I going to make payroll on Tuesday, So yeah, I don't know. I am really excited about what the future, is ahead. I hope it's hard. And the reason I hope it's hard is because most people don't like to grind and move through the hard times, which means then it creates my opportunity to win and achieve what I want to achieve. And I think it's but if you're willing to put it out, take the risk and grind and educate and learn and apply that, dude, the world is yours. I mean, this is I think a great time in history to achieve incredible wealth. And more importantly, personal success, where you wake up in the morning and go, damn, I love this, so I don't know.
People always come to us, Trent. They're like, what's the best investment I can buy? And I tell them, you.
Yeah.
That's it. That's the number one answer. The best investment you can ever have is yourself.
Yeah. So switching gears a little bit, the headline is the debt ceiling.
Oh, yeah.
It's so funny. It's like, I'm like, it always comes down to the last hour. They'll just increase it.
It's just for show.
It is. Unless who's it? Jim Bianco. He's a research firm or something. He's on Twitter, and he made the comment. He said, if the Republicans can hang this on the Democrats' neck, they're gonna let this thing go. They're not gonna do it. But if they can't, you'll see it. They'll raise it at the last.
Right.
Yeah. And it's so sad that is what it is. That's what it is. And I'm like,
yeah, it's like it has nothing to do with what's the best interest of the people.
Right. And I guess hopefully people will start to go, wait a second. Why do we have all this debt? Why can't we? You tell me I have to run my household on a budget. Why are you spending money on bridges to nowhere? One of the best high school football stadiums that I've ever been in is in the state of Alabama, in northern Alabama, Russellville, Alabama. And it was because whoever at the time was the congressman was funneling money in some way or another to pay for this stadium. And I'm just like, really?
Yep.
Instead of creating jobs or creating something else.
Well, it did create jobs, right? They had to build the stadium.
Well, yeah, you're right. Oh, I stand corrected.
Route 90, Route 95, you ever hear of those? Especially through Jersey, Massachusetts, It's a disaster. I do a lot of driving, and it baffles me when I see the money that leaves this country and how decimated, especially the inner cities are and around the inner cities. Like, it's more and more apparent.
Was it during one of the early 2000s or something when, was it Chavez who ran Venezuela?
Oh, right.
Venezuela at the time was the biggest, was a humanitarian aid to the United States, was from Venezuela to the United States. And it was sort of like a, up yours kind of thing. And they would send, 70 billion or something, ridiculous amount of money. And you're like, really? I don't know when that, I had read that and I was like, that's odd. They're really a impoverished country. And and it was their way of saying, stick it, No, I don't know. Yeah, it's interesting how politics is playing into all this. And I just, with, this quarter, I think will be interesting when it comes to earnings and, the bankruptcies and all the pressure. And I'm curious to see how we as we go into June with a combination of the dance with the debt ceiling and then, corporate debt being rolled over. Was it 1.4 trillion has to be rolled over in the next 18 months or something? And then the stance of the Fed, what are they going to do? What's the next move? And then really, what is the overall game, in the game of this, what is the overall, what are they really trying to do? To me, that's interesting just to try to figure that out. Interesting.
It really kind of seems to me in the research and things that I've seen and read, it's like are you going to be part of the WEF program, or are you going to be independent? And that seems to be what's at play here. And I know it's kind of one of those things where when you look at legislation over the years, like think about the Pension Protection Act of 2008.
Mm-hmm.
That legislation killed pensions. The Inflation Reduction Act of 2022, it's not going to stop inflation.
But, and the question is what is inflation really? What is inflation? In this time, I drove from Florida to Colorado over a 2-day span, and my gas prices got cheaper and cheaper and cheaper as I went. And to me, that's deflationary.
Sure.
Well, I think it depends where you go. Like you're going to
Texas, yeah.
Well, I'm in Texas, so I'm in Houston.
Okay.
And I'll say different parts of the city. Like I'm in the Woodlands, I would say like an upper class suburban, and I would say our gas is more expensive here than if I go down to the south side. So I think it's all who the clientele is and where you live and what type of community you're going through and so forth. On the gas and energy price.
But if you think about, you're no longer getting mailbox checks. People have less money to spend. People are companies are laying people off. So if I have less money to spend, then as a consumer, from a consumer inflation standpoint, do we start to see more deflation? From the standpoint of inflation on the 1%ers of the world, are they going to start experiencing deflation in that their investments aren't going to be worth as much as they were? And I think that to me is like, I look at it and I go, have we turned the corner on the inflation story? And you'll see the Fed sort of catch up on that maybe in the next 2 meetings and not raise rates because, what does it take 12 to 18 months for a rate hike to filter into the system? Yeah. So we're just seeing that.
We just started that. Yeah.
Yeah. So we've got 8 roughly, maybe rate hikes to filter back into the system over the next 12 to 18 months. Holy cow. Does that crush consumer spending? Does that crush corporate, R&D and hiring? And do we see this accelerating into, we're actually in the midst of a deflation environment right now, or the beginning?
It also crushes tax revenue.
Oh, what's the thing I'm hearing a lot about with tax receipts for this past year is not what the Treasury was expecting. They're like, whoa, wait a second. We're not getting what we thought we were going to get.
They're literally putting themselves out of business.
What does that mean?
You don't know.
What was it? I have a chart of was it liabilities and capital, the readmittance from the Federal Reserve to the U.S. Treasury, and it's like year over year, it's like they owe them like 50 billion or something, and basically they're writing IOUs to the U.S. Treasury because they their book, their balance sheet is not producing the revenue that it was because it's older, treasuries that were paying like 1-2%, and the cost to run the Fed is eating away at their reserves. So they're not paying out to the U.S. Treasury because they're obligated to pay out over and above everything, the expense of the Federal Reserve, pay that out to the U.S. Treasury. Well, they're not paying that out right now. And it represents roughly 90 billion that U.S. Treasury is used to getting. And I'm like, wait a second, how does that happen? And that's where I go, they just don't know. They just don't know what they do. And then you hear yelling all weekend is like, oh, we're going to run out of money by, June 1st. Or and then it becomes, what will be really broke September September or October. And I'm like, how do you get? I'm like, what? Just hit the printing press, right? I mean, would that solve it?
They're going to go back to the printing press.
Yeah.
Well, but then that's, like you said earlier, it's then only the top 1% that get the money, unless they're going to be writing checks again, unless there's another pandemic.
Whoever's invested gets the money because that's going to send asset prices through the roof.
Right.
And
what is it? 40% of Americans or 50 don't have a 401k or in the stock market. So only.
Let's not get started on 401ks, but yeah.
Why?
Trent knows.
God.
But that's why I think gold and silver. That's a huge case for gold and silver and Bitcoin, right?
And physical, you mean, right? Not gold and silver. You don't mean papers on the stock market.
Yeah, I mean, if you have physical, better.
Yeah.
If you can get paper, sure, but that's it, right? Like and this, we laugh. This is my our buddy Chris's entire thesis is this whole situation, and he has a movie coming out in November around it. Like, there it is, and the only way out is now to print money.
Mm-hmm. That or suffer.
Yeah.
What was it? Was it Asian crisis? Is what was it long-term capital management? It was in 97, 98. And what was a handful of Asian countries filed bankruptcy and defaulted, and their economies just sucked for about 2 years. And then all of a sudden, boom, they took off. And now, it's like Indonesia, Vietnam kind of thing.
Right.
Where does my t-shirt come from? Probably Vietnam, And I look at that and I go, if we had just allowed that to happen during the financial crisis, there's a good chance we probably wouldn't be in the situation we are today. And I wonder if I just finished this book called The Lords of Easy Money. And one part of it talks about Bernanke's game with quantitative easing. And
can't say it.
Yeah,
there you go.
Yeah. I know this is a different book. It's called Lords. Yeah, that's hedge fund world, right?
Well, this is the bankers who broke the world.
Now this one it's a newer book. It's called Lords of Easy Money, and it talks about the Federal Reserve over the last, say, 20 years. And it talks about Ben Bernanke's mission with quantitative easing and to implement that and to continue that beyond the financial crisis. And when the economy starts to slowing growth, to continue to push quantitative easing and the pumping of money and printing of money. And that's essentially what has happened. Well, Jerome Powell was on the board at some level, and he was very opposed to Bernanke's approach because he thought this is just going to get way out of hand. And fast forward today, I look at the 10 rate hikes and I ask myself, is Jerome saying we're going to reverse Ben's and Janet Yellen's little program, and I'm going to do it, and it's going to hurt, and I'm going to continue to raise rates. I'm going to pull a Volcker kind of move, and I'm going to reset the system. And I sort of wonder if that's sort of lingering in the back of their heads right now, to say, we have seen in the last 12 years the enormous wealth gap. We've seen, there's a trillionaire out there somewhere, right? There has to be. There's multi-billionaires, and you think about that creation over the last 12 years, and it's all on leverage and borrowed money. And yet the poorer get poorer. And I wonder if this is his humanitarian approach to resetting the system and creating an even playing field. And maybe he won't budge, and he will raise rates until the job is done.
But how does that help, like, the younger generation? Like them raising rates, unless everything crashes, like,
you reset.
I couldn't buy a house. I couldn't buy it. If I bought a house now, I could, with the rates, I couldn't own my home at all. The rates are double what I got.
Right. But you know what? That's a short-term point of view. If you reset the system, and yeah, people are gonna hurt. I mean, what was it in The Big Short? Brad Pitt rattles off some sort of statistic on the number of people who commit suicide during a recession is astronomical. Yeah, but the alternative is we continue to print, and we continue to do it in a different way, in that we divide this country even more so. And then where does it go? I don't know. It's just something I've been batting around in my head and thinking, well, maybe we do see 100 basis points more moves in the Fed funds rate, and we start to see the pain of it all unravel. But what would be the end result, say 5-10 years down the road? Would we be a stronger country? Would we be less dependent on foreign manufacturing? Would we be less, in a way, soft as a country?
You have to think, Trent, think about the shadow banking system and the derivative books.
Yeah.
You are going to shut down the entire banking system.
Yeah. I don't know. I don't know. I mean, that's a scary thing. That's a very scary thing.
That hits home for pretty much everybody that doesn't have crypto and physical commodities.
Yeah.
Yeah, my big worry too is, I was just graduating high school in 2008, and like, I already see on Black Swan events and on the stock exchange, they halt trading. And what says they won't block you out on the next big, you know what I mean? You won't be able to access your account to sell anything or to even participate in it. That's my biggest worry. Yeah. Even with crypto, that's why I'm a big advocate of not your keys, not your coins. So if you have them on the exchange, you technically don't own them.
Right.
It's an IOU, just like you were saying. They're writing IOUs. You own one Bitcoin.
Right.
So
yeah. I don't know. It's interesting. I'm sort of like, where does it go? And based on actions that I'm seeing, I think we'll have a crash. I hate to say crash, but further downside, and it'll happen quick. But I just hope we can learn from it in some way. Like, I got a 19-year-old and a 23-year-old, and I mean, they get credit card offers every day. Yeah. Here, we'll give you $5,000. I mean, what's a 19-year-old need with a $5,000 credit card?
Oh, you'd be amazed.
You'd be amazed. Yeah.
Yeah, and I think we just
food for everybody, baby. Appetizers on me.
Right. My God, I spent $5,000 this month. How do I pay it back?
We're at Applebee's 2-for-1 special. We'll take 4.
Right. And we're gonna drink all night, and then we're gonna pay for everybody at the bar.
Right.
I don't know. I don't know. I'm just sort of like, these are thoughts that run through my head, and I'm like,
well, that's what you talked about before, right? When we kicked this off, it's getting into the layers of it.
Yeah. Yeah. So I don't know. I do think you're going to see more bankruptcies. I think past weekend or so with, I think it was 7 different companies. They're small companies. Most people don't know who they are, but file bankruptcy. What Bed Bath and Beyond. We saw that coming.
Yeah.
We'll see more banks. But I don't know. I unfortunately I see it accelerating quickly as we go further into the summer. And I saw, what was it?
Vice just filed for bankruptcy.
Who did?
Vice.
Yeah, that was one of the 7. Yeah. It's like, what? That was. I mean, I think I saw where the private equity firm that invested in him, it valued the company at $5.7 billion. When they put the money into that company, and now it's bankrupt. I'm like,
Now, yeah, if you wanted to buy it, you could buy it for, I think it was $225 million.
Right. I think
Less than a quarter of what.
yeah.
I think they're buying back like 5 billion pounds worth of stock. If I saw that correct today.
Wow. Well, you think about the opportunity this all creates. Going on the offensive now. I mean, we talked about the end of the world. The opportunity is having the money, the liquidity to come in and go, hey, let's go buy some stuff. You think about, I know a handful of guys who in 2008, they were sitting on cash in 2005 and just waiting. Right. They were in real estate, and 2008, 2007, 2008, 2009 presented an incredible opportunity for them. And they, quadrupled their wealth over the, over 10-year period, but they had cash. And I think that's, there's some great opportunities. I do think, a lot of the big, tech companies are overvalued, and yet they have the technology that will change our world. I just want to buy them at a right price, and it's not where they are today, And I think if you can be patient enough, it's going to present that opportunity to, you're going to have a handful of group of people who get it, and they're going to create a lot of wealth for their families.
They're going to make a killing.
Yeah. And so I just, the people who are listening to this, I just think, start thinking that way, start educating yourself in stuff you don't understand that could actually create the freedom that you want, the financial freedom and the life you want.
Start questioning everything.
Live the life you want to live.
Moeller from, what was that show? Shoot, I forgot. Mulder.
Yeah, from
Oh my God, X-Files. Question everything.
Yep.
Yeah. Anyhow, no, I do see some opportunities, and in the future, you just got to keep your eyes open and have liquidity to do it.
Yep.
Yeah.
Having cash will pay off until it won't be.
Right. Yeah, and right now you get paid well on your cash, so as long as you can get to it.
Correct, because they want it. Yep.
Yeah. So I don't know.
Well, Trent, if we had to wrap it up and you had to, maybe throw your old advisor hat on, what are a couple parting comments and wisdom you would have for people that are out there?
I would say, number one, don't get emotional about this, because the guys and gals are going to make a lot of money. They're not emotional. So don't get married to them. Don't get emotional about money, because money don't get emotional to you. I used to tell Valerie when things got tight, around payroll time or something, I said, pull out the biggest bill you have in your pocket, lay it on the ground, and I want you to tell it all your sob stories. And then I want you to sit there and wait for it to actually respond to you and tell you it's going to be okay. It'll be all right. It doesn't. So don't get emotional about something that doesn't get emotional about for you. Step back and look at the big picture. What truly is happening? And then and learn from it. We are in a big cycle pivot, a change. As I said earlier, the 3 big things that move macro cycles are war, credit expansion, and social unrest. We have had that for 40 years, and we're at the peak of it. Now we're contracting. And when it comes to credit, where social unrest is at a peak, we're at war and have been for years. So prepare for that. Understand that that is historically when things change. And so take that knowledge, take that what you learn, be passionate about it, go learn, push yourself out, learn to ask questions, and then build your investment portfolio around it. You talked about gold. I like gold. I like treasuries. I like low beta assets that, I don't like tech. Tech is too high beta. I want stuff that is necessary to survive a recession. And so that's, the companies that produce the products that feed and provide the day-to-day living. I always just flash back to a friend of mine said he owned a Budweiser distributorship, and he said to me, "Yeah, we killed it during the financial crisis." And I was like, "Really?" He goes, "Hell yeah." He says, you got basically three things during a recession that kill it. And I was like, "What's that?" And he goes, "Cable TV, alcohol, and Jesus. Those are the three things you invest in." And I laughed. He was absolutely right. My cable guy, he said, "Yeah, we're killing it. People make their payments. The last thing they shut off."
Yeah, Netflix and all that stuff.
Yeah, I think though you invest in that manner, understanding that we're in a cycle change, and that things are going to get tight. Reduce your debt, and look for companies who aren't littered in debt. Unfortunately, that's, a lot of people have that. So I think just overall, I don't know if that answers the question, but I think it's just pay attention and take the time to understand what is happening. It's sort of the whole Keanu Reeves in the first Matrix, the last scene when he is able to see the numbers, right, and he sees how the system works. And that should be our mission. Understand and see how all those numbers make up the system. You do that, you're going to do okay, Yeah. But yeah, so that's my take on it. Hopefully that helps.
Awesome. Thank you, Trent, for joining us. And on behalf of Twin Shores Financial, thank you everyone for tuning in. If you enjoyed this podcast episode and want to continue learning how to become financially free individual, please tune in next week for another episode. Don't forget to like, share, and follow us on all social media platforms. And follow us on Spotify and Apple Music as well. If you're watching us on YouTube, please subscribe. Anybody else have any last words?
I'm out of words.